What's up, everybody? How are you doing today? Oh, Prince is coming in to visit. Just wanted to do this video. I wanted to do this video just so I would have it on record, and what I would like to do is revisit this data annually. Now, this data is about a month old, so it's from November, and it's from the Trading Economics website. And I'm going to provide the link, but the link I'll provide will be under gas prices, which is, I'm not covering that this morning. But I always like checking out the gas prices. I was watching Die Hard, and gas was like 70 cents a gallon. And I was like, I remember those days. I remember when gas was super, super affordable. So anyway, I'm going to read this so there's an explanation to it as well. And then as I'm reading it, I'll pop up the graph. So the unemployment rate was the lowest in 10 years before COVID. Now, the unemployment rate is the percent of labor force that is jobless. It is a lagging indicator, meaning that it generally rises or falls in the wake of changing economic conditions, rather than anticipating them. When the economy is in poor shape and jobs are scarce, the unemployment rate can be expected to rise. So I have some friends that are in the entertainment or in industry, so like they work on cruise lines or said they work in hotels or like some of the theme parks. You know, they had a 30% unemployment rate earlier this year. I haven't checked lately on it, but that's astounding. And I think at one point, maybe like in April, it actually went to a 40%. So you got to think about half of those people are unemployed, are actually claiming unemployment. There's the other factor to people don't realize with unemployment is there's a lot of people unemployed that aren't even claiming unemployment, and that's where they're getting this data. So realize these numbers could be actually even higher. Consumers' confidence. Now, I became aware of consumer confidence when Bill Clinton was president during my military career because the economy wasn't always so well, but the people had a lot of confidence in Bill Clinton. So therefore, they were out buying homes and they were remodeling homes and they were spending money on high-end like appliances, high-end things that cost a lot of money. And so that's when consumer confidence is really, really good, when people are purchasing high-value type of consumer products. So consumer confidence was the highest in 10 years pre-COVID. Consumer confidence is an economic indicator that measures the degree of optimism that consumers feel about the overall state of the economy and their personal financial situation. When consumer confidence is high, consumers make more purchases. When confidence is low, consumers tend to save more and spend less. Consumer confidence typically increases when the economy expands and decreases when the economy contracts. Oh, man. So, once again, where is your confidence in what you're purchasing? New cars? New appliances? Are you remodeling your kitchen or your bathrooms? Are you spending money on things like that? Or are you really at the point where you're concerned and you're saving money? So where's your confidence lie? Household debt to GDP is the lowest in 10 years. Higher debt is associated significantly with higher unemployment up to 4 years ahead. And 1% point increase in debt raises the odds of future banking crisis about 1% point. So a study by the World Bank found that countries whose debt to GDP ratio exceeds 77% for prolonged periods experience significant slowdowns in economic growth. Pointedly, every percentage point of debt above this level costs countries 1.7% in economic growth. The phenomenon is even more pronounced in emerging markets, where each additional percentage point of debt over 64% annually grows by 2%. So, once again, where is your debt? And is it risen or is it lower? And of course, this is analysis with the overall GDP. Business corruption is at an all-time low, which is one that I didn't expect. But it was on the rise from 2010 to 2015, so 5 years it was on the rise, then began to decline in 2016 and is now at an all-time low. Reasons for corruption include the following: greed of money, desires, higher levels of market and political monopolization, low levels of democracy, weak civil participation, and low political transparency. So that's why corruption occurs. Low political transparency. Corruption erodes the trust that we have in public sector to act in our best interests. It also wastes our taxes and rates that we have been earmarked for important community projects, meaning we have to put up with poor quality services or infrastructure or we miss out altogether. And then the last one that I'm doing today is business bankruptcies. They're at an all-time low in the past 10 years, which means businesses have been profitable and are able to pay their bills. If you could look into the future for the next few years, do you think this number remains static, decreases, or more importantly, increases to the previous years? How do you think this has affected your local economy? I'd like to hear your feedback. I'd like to hear your thoughts on these graphs and the overall economy, and if you look back over the last few years, how the economy has really done extremely well. And I'm going to revisit this next December after I pull the data from November. I love you guys. I look forward to hearing from you. Have a great day.